Don't place a trade based on what you're seeing in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Hey traders, John Howell here. And in today's video, I'm just going to give you guys a bit of an update on what I'm seeing across the board. But I'm going to be doing a bit more of a bigger picture. You guys know what I'm thinking on the short term. And I'm going to be doing it, as I said before, I'm going to do a bit of analysis on the big picture on what these markets are, not tomorrow, but the big picture, and to see what they're doing. I'll be looking at the Dow Jones, S&P, the Nasdaq, and what I'm seeing just on the overall picture. It doesn't mean what's going to happen tomorrow. Also be looking at some of the other markets such as silver, gold, and some of the mining stocks as well too. So again, this is like a bit of a big picture update on where I believe things are going long term. That means probably over the next couple of years. And once again, guys, this is just my guesstimate based on what the market is telling me and what I'm seeing through there. So if you do need some extra help, guys, then I've actually just put on a free training. I've just recorded the free training, and it's actually my number one, my most explosive and powerful chart reading and also trading strategy of how I approach the markets for the last 15 years. If you're looking for a powerful pattern that when it appears, you have a very good chance of it just like that absolute explosion happening in the market, and I really do mean that, then go to johnsfreegift.com. You're going to be able to see that number one pattern and exactly how it works in the markets. Plus, I go through dozens of examples as well too, so you can start to apply it in your trading today. So let's go have a look at the markets right now. And one thing I want to share, I want to start off with is we'll start off with just a blank chart. We're going to look at the weekly chart here on the SP500, and then we'll go through all the markets through here. So we can see that what's actually happened here with the markets is that firstly you can see we actually had a very sort of slow grind up through here, pretty much really sideways. And as you can see, right, like just buy and hold stocks, right, like really hasn't done well over the last sort of, as you can see, right, we've been pretty much flat, haven't we? Slightly up since 2018, really. We had a big move up, and then we've just been going through here. So what I personally believe is happening right now in the S&P 500 is we're forming one sort of massive topping pattern through here. And why I believe that is, one, I believe we are at the end of this. I'm looking at the monthly charts right now. We are at the end of this massive bull run since 2009 to now, so 11 years. So I believe we're getting towards the end of that, and plus we're at the end of the whole Rona situation. I believe has started the overall cascading effect of a bear market in play. The flush that we actually had just recently when the virus situation happened, I believe that's the start of this whole sort of depression that's going to happen. And one thing I believe is that we're just forming one big massive topping pattern through here. I truly believe that right now that we are starting to see, and we're probably likely to get something like this for this year. You know, market sells off, market goes up, market sells off. I don't believe we're going to get to new highs or new lows this year. Again, I could be wrong, but I believe we're forming. And let me just see if I can bring up the, let's go this one here. I believe we're forming some sort of we've got a right shoulder head. I believe we're going to be forming in a right shoulder here. Now, this is a monthly chart here, guys. So I believe for the rest of this year, we're probably going to be doing this. And then once that happens, then we could say, okay, if this turns into some sort of head and shoulder formation, where is the projection on that? And that's actually really interesting, isn't it? Like, let me actually take everything off the screen here. If this does form into a head and shoulder, guys, okay, now you can't say it is, I can't say it not. We know, we just have to wait and see. But if it does form into a head and shoulder, then the projection, what we do is we measure from the low of this bottom through here. Okay, see the bottom through there. Bottom through there, we've got the head up through here. So this is the sort of the top up through here. If this does turn into a head and shoulder over this year, and the next year we roll over, then what you do is you measure from the exact high of that, you measure from the exact low, and then if we start to break below 2,400, if this starts to slowly come down again, or quickly come down again, and we start to break that 2,400 level, what we need to do then is we need to then project that down from there to there. And then as you can see, right, we actually bring this up through here, and you can see where if you look at where this is here, if I open up my charts, look at that. Isn't that just a coincidence? I think not. So to me, long term, it says to me that one, I believe we're likely to form this right shoulder, and we're probably not going to make all-time new highs, or if we do, it's probably not going to turn into a massive bull market or massive bear market this year. I believe the market's likely to go sideways through the election time, and then from that, then we'll start to see a possibility of a head and shoulder forming. Again, guys, this is going to take a good couple of years, right? So this year, not much going on, up and down, up and down, up and down, down 10%, up 10%, and so on and so forth. And then next year, we start to roll over. We start to have a bit of a bear market. We break the 2,400 level, and then we are on our way down to around about that 1,500, which is a coincidence that the projection is right at the highs of these major resistance levels. So I wouldn't be too surprised by 2022 that we are actually down here at 1,500 as things start to really unravel underneath the surface. Or what should I say, continue to that. And right now, what we're seeing is that the whole virus situation, the effect on the economy of what's happened is going to last 18 to 24 months of economic disaster. The Fed, when they print money, only lasts around 3 to 4 months. And then on top of that, okay, so look at this here. This is the situation we're in right now. Is that firstly, 18 to 24 months is going to be, 18 to 24 months is going to be the disaster, or that the economy is going to be hurt or affected by what's actually happened just recently, okay? When the government, when the Fed does print money, it only lasts 3 to 4 months before that starts to wear off, and then they're probably going to have to go print more money, right, to give a bit more floor. Now, here's the thing, right, 3 to 4 months. Now, here's also the thing. The money that they're printing, which only going to last 3 to 4 months, are around about 50% of all the money that's actually going into the individual person is actually going into savings. It's not going into the economy. So therefore, what's happening right now is that there's this still, if you had, say, a $1 trillion or call it a $1 million hole, right? $1 million hole because of everything that's happened. And so the government prints $1 million to go put it into Bob's pocket over here. But then he says, you know what, I'm gonna spend the $1 million, but I'm gonna cut that up right now. I'm gonna spend $500,000 right now, and I'm gonna put that in the economy. I'm gonna go buy some shoes. I'm gonna maybe book a holiday. I'm gonna, buy whatever, right? But you know what? I'm not too quite sure what's happening in the economy right now, so I'm going to save just under 500 right now. It's going to go over into my savings account, and that's what's actually going on right now. You see record savings right now within that. So people are really very fearful. So therefore, savings are starting to grow through there. So even though the government's doing whatever they can to print money to fill this massive hole that has happened by the virus situation, even though they're doing whatever they can to fill it, that the public who's actually receiving this government system is not spending as much as they wanted to, which is also so they're really only, if you look at the hole, right, only about 50% of the hole that they're trying to cover is being filled, and this one here is still left empty. Because this 50% here is going into savings and not back into the economy, which they're trying to do to stimulate the economy even more again. So that's what I see through there, guys. Also, on a bit of a candlestick note, if I look at my monthly charts through here, I see this on the SP 500. I see how we've got like a bit of a sort of a doji pattern. You can see it came right up, actually ran up to almost through here. And then now we've actually closed through here. If I look at the Dow Jones, pretty much similar pattern, but you can see a very big rejection candle. Very, very, very big rejection candle here on the monthly charts. So even if we did get a bit more of a rally up, I believe we're probably likely to see something like that, and so on and so forth, looking at the Dow Jones and the S&P 500. So what has been good so far, what has been good for the last 10 years is probably coming to a halt out of the markets today. But when looking at, say, things like gold, I truly believe, let me go back to the weekly charts here. Gold, I truly believe I believe we're in a big, massive bull market, but where we are right now with gold is just above that $1,800 level through there. If you see that, let me bring up, say, the candlestick chart here for a minute. And I bring up the good old, there's actually a lot of lines through in there. Let me just, you know what? Let me just erase all. Let me start from scratch again. So you can see we've actually had a pretty big bull run, and we're actually getting to a point right now where there's major resistance around that 1,800 level there, and that's just above there. So even though we may get a little bit more upside, I wouldn't be too surprised if the market does start to pull back on a short-term basis. That gold actually continues along with it. So even if we do get a little pop to the upside, you could see this major resistance point over here. So I wouldn't be too surprised, as we've been slowly crawling up, I wouldn't be too surprised if we actually did continue to pop up and then possibly even see a rollover from there. So and then a rollover and then a bit of a drop to the downside. So that's something that I'm seeing through there, guys. Also moving on to gold, silver right now. Silver right now has been very, 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 very low for here. So I truly believe that the silver department, that I believe that this is the final low in silver for a very, very, very long time. So I believe that this move we're seeing right now is just the start of a pretty nice bull market over the next couple of years. Same with gold as well too. But what's likely to happen is that the money that's being printed right now will cause inflation, not immediately, but later on. Maybe 1 or 2 years down the track, you'll start to see inflation pick up. And when that starts to pick up, you'll start to see these metals start to pick up big time as well too, especially silver, gold. So we may not be doing, we may not do much for another 6 or 12 months on silver, right? Like, we just don't know. But I believe over the next 5 years, we're going to see some exciting moves through there. Same for the GDXJ, or the GDX. We actually just started to break out above 30. So I believe the bull market is on its way overall, okay? And also GDXJ, we haven't broken out yet on the GDXJ. As you can see, we're still at this $50 level there. I believe we still need a bit more time just going sideways on a short-term basis. But the overall basis through here, guys, the overall long-term that I do see that we're likely to, this here is not really done much since 2016. So I believe once we start to break above that 50, then it's pretty much off to the races from there. And that's what I do see there, guys, from the overall GDX. So there we go, guys. That's what I see. What's next? The big picture. What's likely to happen? You know, stock market possibly head and shoulders. Silver, gold, mining stocks to the moon, I believe. So there we go, guys. Guys, make sure you head on down to johnsfreegift.com. Grab that free training that I put together for you. We'll learn my most explosive, powerful chart pattern. And I actually use this pattern within my #1 trading system. And it's also the #1 system that I've used for the last 15 years. So go to johnsfreegift.com or click on the very first link in the description below, and you'll be able to get access to that right now.